Hello, everybody, and welcome. My name is Bennett Tchaikovsky, the accounting professor, and this is my intermediate accounting walkthrough from Wiley's 18th edition, problem 8-2. So this used to be chapter 9, and I've gone through the problems I've went through, and this is literally the only one that's actually even changed. But let's just kind of talk about the text. So authors are Don Cuso, Jerry Weingut, and Terry Warfield. The question used in the presentation is copyright 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of myself, Bennett Tchaikovsky, and not the authors of the textbook or of Wiley. So let's go get to it. And before we thank the bus driver, let's kind of come over here and take a look at our particular question. And let me erase this because I just was doing a little bit of work on this before. So over here, we have Garcia Home Improvement installs replacement siding, windows, and louvered glass for single-family homes and condominium complexes. The company is in the process of preparing its annual financial statements for the year ended May 31st, 2025. Jim, the controller for Garcia, has gathered the following data concerning inventory. So right over here, the balance and the raw materials inventory account was $408,000 as, aluminum, cedar shake, louvered, and thermal. And then over here, relevant inventory cost and market data in the schedule below. So they've assigned Patricia Devereaux, an intern from a local college, right? Just another way to try to make it relatable to you. The task of calculating the amount that should appear on Garcia's financial statements under the LCNRV, lower of cost or net realizable value rule, as applied to each item in the inventory. Okay, so that's going to be really important. We're not looking at this in the aggregate, we're looking at each individual item. Okay, so over here, the best way to kind of go through and look at this is we've got aluminum siding, cedar shake, louvered, and thermal. Okay, so over here, my cost is $70,000, $86,000, $112,000, and $140,000. So right over here, this is what's giving us our 408. Okay, now I'm doing this at the net realizable value. They're not giving me enough information like with the normal profit margin and all that other stuff. So we're just going to say NRV. So if my net realizable value for the aluminum siding is 56,000, right, I have to record this at the lower of cost or net realizable value. So what I'm going to go ahead and do is subtract this from the cost, and this is going to get me my adjustment. So my adjustment over here is going to be for 14,000, right? So I have to show this at the lower of cost or net realizable value. And that's what I'm going through over here and doing. Okay, so let's go to the next one over here. My cedar shake siding has a net realizable value of 84,800. Again, we have a problem. What is our problem? Is that my I have to show this at the lower of net realizable value and cost. So my adjustment over here is going to be 1,200. For the louvered glass doors, my net realizable value is 168,300. Now, I'm already showing this at cost on my books, right? The cost is showing over here at 408,000. So I don't need to do anything here. No adjustment required. If it was only all this simple. Over here, my net realizable value is 140,000. Since that is cost, I'm already showing it at the lower of the both. So my total amount of my adjustment that for my write down is going to be 15,200. So it's 15.2 part A. For part B, for the fiscal year ended May 31st, 2025, prepare the entry to record the inventory write down, if any, using the loss method. Well, the methods I like to use are as one or the other, right? So the solution I think shows loss on, so you would do this on 5/31/25, basically loss Let's see what they called it. Just give me a moment. They called this an inventory loss, and then you're crediting inventory directly. The way I would probably go through and do this, and again, it depends on the materiality of the amount. Most of the time, you'll go ahead and debit cost of goods sold, and then you're going to go ahead and credit inventory, or you can do it on an allowance to reduce inventory to net realizable value. It always is just going to kind of depend upon how material is the item. And when I talk about materiality, it's really going to be materiality with regards to cost of goods sold. So if it's a significant amount, again, so this is to record inventory loss. Okay. Now, explain the rationale for the use of the lower of cost or net realizable rules that applies to inventories. Okay, let's give a quick example right here. Why do we want to use this? Okay, well, what if in some kind of extremity that this was only worth like $2,000? If you don't go through and show this at the actual value of the inventory or what you expect to receive from it, you're going to be overstating inventory. Guess what happens when we overstate inventory on the balance sheet intentionally? That's right. We're going to go to accounting jail, right? That's federal prison. It's not fun, right? I've never been there. I don't want to go there, but you all are going to become CPAs if they're asking you to do those kind of shenanigans. Yeah, you want to get out quickly as possible. Look, the reason why we're doing this is that when we show inventory on the balance sheet, it has to be shown at what we're expecting to get out of it. If the value has gone down, we need to take the loss immediately. And if there's obsolescence, again, who are we making our financial statements for? The investor. If we don't do this, it's going to cause, panic at the disco. I'm not really sure, but it's not going to be a good thing, because if we're overstating the items that are on our balance sheet, it's just, again, it's not going to be good. We do not want to be doing that as accountants. So in any event, that is problem 8-2, and I've got the video done. It's exciting. Wow. But literally for everything else, that if you're following any of my other videos on this channel for these different intermediate accounting chapters, because they just went to the 18th edition, there's really not a lot of difference. This is like literally the second video in 5 or 6 chapters that I've done. I'm slowly getting through them, but in any event, I want to thank Wiley for allowing me to continue to use their material. Please don't forget to like and subscribe if you'd like other solutions. Feel free to ask for them in the comments. Have a great rest of your day.